Well, good morning. How y'all doing? Let me know if you could, that you can hear me loud and clear. Should be able to, but just want to make sure. Kitty decided she wanted to say hi right away. See if she makes her way back or not. Awesome. Thank you, Sean. Good morning, good morning, good morning. Futures are down a bunch. I was just noticing. They were down a little bit about, an hour ago. And now they're getting worse. So it should be interesting for today. And if you all want to, whenever you're ready, just start throwing ticker symbols in there and we will go look at things. But I am actually going to bring out the overall markets real quick. See what the charts look like on it. Notice with the SPX. Good morning, Ellen. Good to see you again. Let me guess, the Qs and the spiders. Probably won't be much different than yesterday. But actually, this will give you the spiders. The SPX, basically the same thing, right? We're at that level, that support level that we've got. It's not a huge one, I don't think. Let's see historically if there's anything there. If it's major. Not really. Just this one little bounce that we had. So it's not a super significant level, but it dropped back below it yesterday. So we shall see what today brings. It looks like, as of right now, the Dow Futures are off a little more than 200, and the NASDAQ, I think, 140 or so. When I looked first thing this morning, the NASDAQ was down more than the Dow by quite a bit, and then the Dow finally trailed off, so which is unusual, but anyway. Good morning, Erica. Good to see you all. Bright and early. Well, at least it is for me. It depends on where you're at, right? I'm usually up this early anyway, so it's market opens at 6:30 out here on the West Coast. So this is only my second cup of coffee. I'll have about 4 or 5 down here in the next couple of hours. So it's dark out now. It's supposed to rain finally because we haven't had rain in probably 3 months. It seems like forever. So I am ready for it. It's supposed to just drizzle, and then Saturday we're supposed to get a lot of rain, and then it goes back to drizzle. That's what we get a lot out here in the Seattle area. A lot of gray days and lots of drizzle. We don't get any hardcore rains, not like Florida, right? Volume-wise, we're like half. I mean, as far as states go, about half the states. So anyway, so it'll be interesting to see what happens with the SPX. Look at the Dow real quick. All these look pretty similar. And we did, I think we talked a little bit about this yesterday, did we not? We got a double bottom. We broke the midpoint. So if we hold this level, if we hold above that level then and take off, then we have a clear double bottom in place. But it's got to hold that. It looks like at this point, at least this part of the morning, and looking at yesterday's candle with the long shadow up top, it looks like we're probably going to have a false breakout there. I don't know if the SPX did that too or not. No, see, the SPX did not break above the midpoint right here for a double bottom. If you got a double bottom, it's got to break above the midpoint here to confirm. The Dow did that, but just barely. The Russell actually gave us an evening doji star at the midpoint, right? This day right here. Let me make this bigger so you can all see it better. So here's the midpoint of the double bottom, which is a nice looking double bottom, right? You got not only a double bottom, but it's formed by a bullish engulfing pattern. Not only a bullish engulfing pattern, but a huge bullish engulfing pattern that not only engulfs 1 day, but 3 days, which, as you should know, if you've been through patterns in a flash, that the more days it engulfs and the bigger it engulfs, the stronger it is. And obviously big volume is a thing too. So you got big volume engulfing multiple days and a huge candle. That's a huge reversal pattern from a candle's perspective, right? And then you also combine that with the double bottom. It looks beautiful. But like on the Russell, right, we came up and we challenged the midpoint right here on this day, just 3 days ago. But it left it a doji, and then the day after it gaps down and leaves down. So now we have an evening star in play at the midpoint. So now it's this kind of a mixed spot. Like you've got this beautiful double bottom, beautiful bullish engulfing pattern that looks like we're going to be bullish. And then all of a sudden you get a bearish indication. So which one is it? And, we really don't know yet. As far as I can tell, we're going to be stuck in this range for a little bit. The only way that we know we're going to continue bearish or bullish is to break out of one of those points. We're either got to break out of the midpoint here. Hang with me, Trip. I see your questions. Or we got to break those lows. So we're essentially just kind of stuck in this range right now. So we'll see. And this is where, same thing back here, right? We had a similar situation right back in here, and then it did actually break above there. So I'm not going to get too excited about anything until we break one of those levels right there. At this point, it's just going to be, I think we may just be range bound for a little bit, because there's a lot of people coming in, they're seeing the double bottom, they're getting excited, they're going, oh, we're in the bottom, we're at the bottom, we're at the bottom. I don't think we are. I don't think we're even close, honestly. But there's quite a few people out there that are chirping, saying, oh, we made a bottom. So if they're buying, then obviously that's going to create a little bit of a floor. So, but wait for the chart to tell us. So, excuse me just a second. All right. Qs. All right. Let's look at the NASDAQ. Will that be good enough for the Qs? Or we'll just look at the Qs. Qs, NASDAQ, basically saying. AMD. All right. Yes, exactly, Ellen. So where did the Qs go? How come we didn't get it up there? There we go. Very similar. Already have lines on that though. So yeah, I mean, kind of the same, except the NASDAQ. The NASDAQ does not have a beautiful double bottom, and that's what's with all four major markets basically. I mean, the Russell's not as major. You get the SPX, the Dow, and the NASDAQ are the three major markets, right? The Russell is the small caps, but they're not all together, right? They're not all in the same boat. The NASDAQ doesn't really have a double bottom. We got a bullish engulfing pattern, a nice one. We engulfed 2 days, almost 3, big volume. So we got one candle pattern on the NASDAQ, but not the double bottom. So we don't have all the major markets really in sync. And usually if there's going to be a real bottom put in, then all the markets will be in sync. They'll all look very similar. They'll all be behaving very similar. And this one is close, but not quite. So I think there's still some challenges here as far as that goes. But I would say same type of thing as far as ranges go. Between there and there, I'm not too excited about anything. But my style of trading is I'm buying calls or puts for the most part. I do very few spreads. I've started doing a few on the Russell, just here and there, but it's not my favorite. So, and essentially what I'll be doing, and it's when we started to create this little top back here, when we had that, we started to hit that trend line, I started to nibble here. And that's kind of what I'm doing right now. I'm about to start doing that. We'll see what happens today. I started to put little positions in here, just pick up 1 or 2 contracts, 4 or 5 contracts on a few things, and just slowly kind of enter as it starts to turn bearish. And then when it started to accelerate is when I started to add to it. And then got into full size positions. And then as it continued to fall, started to peel back. So that's kind of what I'm looking for here, is looking for some kind of bearish indication or bullish. It doesn't really matter to me which way it goes. But I want something that says, okay, it looks like it's going to head this direction. And then I'll start nibbling and start putting positions on the way it looks like it's going to go. And then if it continues to accelerate, then if it breaks down, I mean, I'm overall bearish. I'm probably going to be bearish for the next year and a half, 2 years. I mean, you never know how long it's going to take. But so I'm definitely leaning to the bearish side. So I'm looking more for something that's going to break down to the downside here. So if the NASDAQ or the Qs breaks this 260 level, then where might we head to is the question. Oh, my goodness. It just crashed on me. I don't know why it does that. It's been doing that more lately. It's cold in DC. Yeah, it's getting cold out here too. It was 44 the other morning. Need to come Monday. You're still waking up. Oh yeah. Well, it's still loading up. I kind of love trading, just a little bit. I've only been at it for 22 years now, so I don't think you do something that long especially with how difficult and challenging it can be and having a lot of hurdles to overcome and without having a passion for it. So there we are back at the Qs. Okay, good. Look at a weekly. So yeah, if we don't hold that 260 level, what's that? I don't know. That's not much. There's not a whole lot. I mean, you look here, this is a weekly chart, but there's the peak right before the COVID crash, but there's really nothing or not much to hold it from dropping all the way down to 233. So this is one of those that I actually hope I hope it does that, because I've got some, well, the SPX too, but I've got some long-term puts on the spiders, and I've got an order out there to trigger. I added some to it and got an order out there to trigger, and it'll probably hit it if it goes to there. But so yeah, if it breaks that 260 level, it looks like 230, 235 is the next point. So, which is a pretty sizable drop. And that's what, 30 points, 25, 30 points. That's another 10%. So that's what I would expect. The question is, when does it do it? And if it breaks that 260 solidly, I would say that we're probably there. So, all right, Trip, finally get into it. AMD, I'd love that right there. This is beautiful, actually. I'm glad you brought this up. Well, it will get out of the box. The question is when. And probably that's a really, really tight range, and they usually don't stay there too long. That's what 1, 2, 3, 4, 5. Let's forget about that. 1, 2, 3, 4, 5, 6, 7, 8, 9 days. We've essentially kind of been stuck. And when you go to a line chart, look at that. That's just a really super tight range it's stuck in, which is actually can be really good. Right? You think of rubber band, right? The tighter the rubber band gets, right, the more you pull it, and when you let go of it, it snaps. So this thing probably will move very quickly when it does. I would guess it will. Let's see what it looks like historically. Well, yeah, and see, there's that. I mean, it's not, how significant is that? That line's not super huge. I mean, it's only got a couple of spots, right? It's only hit this line a couple of times, maybe 3 here. And y'all know, right? How many points does it take to draw a trend line? 2, right? How many does it take to confirm a trend line? 3. I see so many people, not you guys, rookies. They post pictures of stuff, and most of this is on Facebook, and it's people that, they're new to trading. And no offense to them, but they don't know any better. But they draw these things. Oh, here's a trend line. They draw these, and you see all these drawings with, like, it looks like pickup sticks, right? And I did that when I first started too, so I get it. But they draw these things with just 2 points on it and say, oh, look at the trend. It's like, well, it's not technically a trend yet. So I get a little OCD about some things. So it's there, but it's not super significant. But if it breaks 58, I mean, the next major level there is 49. Basically 50 would be a round number, which, it's 8 points. That's a good solid drop. In fact, I'm gonna modify this plan actually to show that. And that it's downward trend. And you can see yesterday it tried to get above it, but it failed. And there is, so you got 1, 2, 3, 4, 5, you got 6 hits on it. So this is one I would be looking for. I mean, personally, something bearish because of the fact that it's hit this line several times and it's failed. So I'm going to move this plan down. We'll put that right at 50, actually. Close enough. And get that up. And this is essentially, if you're not familiar with my style of trading, this is basically what I do. I go, okay, where's the stop at? In other words, if I get into this trade, actually, that's probably a little too tight. Anybody else have challenges with stops? It's never easy to figure out where to put them. You want to put it far enough back that you give it some wiggle room. Actually, I'm not even going to go that far back because I think if this thing breaks it, I think it's going to go. I don't think it's going to whip back. So I'm going to put it right there. It's a little tighter than maybe I usually would do. But now I do, once I've got the stop and the target in place, now I'll put the entry point in place. But for that, it's just simple math. I take the stop and the entry point, plug it into the calculator. There's the stop. 58.39. Target, I'm just going to round it off to 50. So 56.29 gives me $6 of potential profit and $2 of risk. So I've got 3 to 1. I got 3 times as much upside as I do risk. And if you're not familiar with why that's important, then come in here to the bonus section and watch the video on risk reward, and you'll see why. Because if you think about this just for a second, it doesn't take much. If you do, let's say you do this exact trade 4 times. If you lose 3 times, you've lost $6.30, right? If you win once, you make $6.30. You break even, right? So you've done 4 trades. You were wrong 3 times. You were right once. So your batting average is only 25%. You're wrong 3, right once, and you break even. You don't have to be right that often, right? That's the beauty of using risk reward in this way. You don't have to be right that often. I used to believe, and some people still do, that you got to be right more than 50% of the time to make money. Uh-oh. That's not what I wanted. But you don't. You can be wrong a lot. You can be wrong 74% of the time and still be profitable. And when I tell people that, sometimes they just freak out and they're like, that doesn't make any sense. It makes perfect sense when you run the math and look at it. And the beauty is that it actually works in reality. I know a little bit. The problem that most people have is when you deviate from that, right? Because you get in and you don't stop out, you don't get out when you're supposed to, and you have, a little $2 loss that turns into a $7 loss, right? That's the challenge that most people have, is stopping out when you have to. But here's the beauty. If you haven't utilized risk reward in that way, go try it and watch what happens to how you feel. Watch what happens to your emotions and your fear factor in your trades. Because when you suddenly realize, I have 5 trades on, and I no longer really care what happens. If you put the stop in, you just let it go. If it hits the stop, then so be it. If 1 or 2 of them work out of the 5 that you have on, then you're going to come out ahead. And all of a sudden, it's like, wow, I can just relax. Because that's exactly what happened to me. I learned risk reward early on, but I didn't see it in that perspective. And all of a sudden I go, okay, well, why not do this? And I started doing it on some of my trades. Then other trades, I didn't do that. And I realized one day, I'm like, I'm not worried about these trades over here. The ones that I have a plan on, like you see on the screen, like a stop, target, 3 to 1 risk reward, I don't care what happens with those, because I know in the long run, I'm going to come out okay with those. These ones over here, I'm still a little nervous and anxious about. Something to think about. And if you haven't done it, then start doing it and watch what happens, and pay attention to the fear factor that you have with regard to your trades. Because if you haven't experienced it, it's kind of interesting. It's awesome is what it is. You will start to use it all the time and never deviate from it because of the emotional control and the emotional management it gives you. So, but yeah, I would, AMD, I don't know if there's anything. I don't look at indicators a whole lot. I mean, that's a little bit bullish. You got the moving averages there that's bumping up against, but also they've been dropping for a long time. So that's the only part. That's the only part I'm a little skittish about right now, is that we're pretty oversold for the most part. So I'm a little bit skittish on the downside. And that's why even right now, until we really break break the lows, I'm not terribly excited about taking huge positions in anything. So, but this one, the chart looks pretty darn good if it breaks lower. So what else we got? What part of California? I'm not in California. I'm not crazy. I've got a couple of good friends in California, guys I grew up with, and both of them want to get out of there. But they're kind of stuck. Family stuff and work stuff. And so I would say that most people in California are probably in that same boat. But yeah. But I'm not. I'm in Washington. I'm in Seattle area. I'm south of Seattle a ways, but we're not a whole lot different here as far as if you from the political environment, the taxing, and all the other stuff, that the reasons that people hate California. I mean, the weather's beautiful down there. We don't have great weather. We've got great environment. I mean, we've got mountains and water, and we've got all kinds of good stuff like that. But yeah, our government likes to tax everything under the sun. So, okay. CVI, Kevin. Yeah, I didn't miss anybody else's, did I? I'm making sure I didn't miss anybody. Oh yeah, Eric, I just saw your question. Do you think the market will be bearish for the next 2 years? Possibly. I mean, we never ever know. It's really hard to project out for that long a period of time because things can change dramatically. But at the same time, when you look at the big picture, well, speaking of politics, you look at the geopolitical environment, not only here in this country but around the world. Look at energy prices and how crazy that is, which is what almost always creates recessions. You got energy prices and low unemployment, which, as you noticed at the beginning of this month, the market did not like. Unemployment came out and was lower, and the market freaked because that means the Fed's going to keep tightening. The housing market is dropping, probably going to continue because interest rates will continue to rise. They're upwards of 7% now, and they're probably going to go up to 8, 9, 10, 12, which will crush the housing market. So all these people that over the last couple of years have felt really wealthy because, hey, I bought a house 5 years ago for $200,000 and now it's worth $14 million, right? All of a sudden they're going to start to see that what they consider an asset, the valuation of that asset will start to drop and they'll feel less wealthy, which will make them pull back on their purse strings even more than they already have. So I think we're at the very beginnings of a downward spiral and things getting really ugly. Some companies, especially in the mortgage industry, I've got friends in that are already getting laid off because the business has slowed so quickly, and it will probably continue. So yeah, it doesn't. I mean, the overall economy does not look pretty. But I've been saying that a lot lately. Is just because the overall economy, I can't control the overall economy. And whether you're bullish or bearish doesn't really matter. But if you understand how to trade, you can make market in either economy, either market, whether it's up or down. Then my economy can continue to grow, even though the overall economy, the world economy, the U.S. economy, even though it may be shrinking, I can continue to grow mine. So personally, I'm not concerned about it. I can't do anything about it. A lot of people are freaking out and worried. But why would you freak out and worry if you have control over your trading and you can manage your own money, right? So I think we could, I think we're in a bear market for a while and bouncing back from it. I think we may or may not bounce back quickly. The 2020 V bottom is very rare. Buying long-term Amazon. Let's look at this real quick and then I'll come back. I just noticed I missed that Amazon one. What is this? CVI, CVR Energy, oil and gas. Yeah, oil and gas has been on a tear. So these guys are not super long. Just looking at the chart real quick. There's the major ranges there. Is there something in between there? Yeah, there's a little bit there. So I just go, first thing I do is look for the major points. And there's some way up here. But eventually, and I think it's already starting to take place with oil, is that you got some demand destruction going on. And I think it's probably going to get worse because as the economy gets worse, people pull back and they stop driving and they stop traveling. Next summer, I would have ventured to bet that a lot of people will not go on road trips like they have been because gas is probably going to be more expensive. People are pulling back supply in the Middle East. They're cutting back. OPEC's cutting back. So if this thing cracks through that 39, it could go up to 46 or so. And there's not really anything to stop it. You got a little blip there at 40. So I would, if I was looking at trading this is the opposite of a lot of the other ones where the overall market is oversold. So there's a possibility of it bouncing, even though it very easily could stay oversold, right? Markets can run for a long time and they can also fall for a long time and stay oversold or overbought for a period of time. So don't let that dissuade you. But at the same time, you've got to be aware that it's there and it very well could reverse. You got the same thing here. I love the fact that it's at this resistance level. I would expect it to actually pull back a little bit. If it fell back to this level, maybe even to 36, and if it found this is not much of a support, But if it dug in here and then started to rally, I'd maybe nibble on it, maybe do a little position because you got pretty solid resistance here at that 40 level. Breaks north to 40, then yeah, 46. But again, it's really, really, I mean, we're 25 to 40 in, what's that, 3 or 4 weeks? So I'd be cautious with the upside, tight stop, but it could go. So this is what I would wait for it to settle down myself. I would, if it bumps its head on here, kind of like AMD. Was it AMD we were looking at? How it sat there for 7, 8, 9 days and just held that line. If it holds this line and then breaks it, that's a big deal. So this one is hard to say right here because it's out of resistance. I mean, I would wait on it myself. Long term on Amazon, I just noticed we only got a few minutes left. Man, a half hour goes by quick. Long-term shares of Amazon. You talking about long-term shares or are you talking about leaps? There's what I think about Amazon. I guess that's not a bad picture. We have, and this you can see is a very solid trend that's in place, this trend line. And we're testing it. You know, we bounced right there at, what's that, 105, 108, something like that. If it can't hold that trend, then 100 is the next level. And Cat's playing chess again. She gets up and bats the chess pieces around. She knocks it off the table and then bats it around. I just realized that's what she's doing. She's knocking the chess pieces down my stairs. It's crazy. I just got this kid like 4 months ago. But yeah, I think Amazon has a really high likelihood of coming down to 100, possibly even 87. So I'm definitely not bullish on Amazon at all. Because they're a giant ship out in the ocean, but if they get torpedoed inside, there's a lot to repair, right? I mean, it's a major problem, and they're going to slow down even more, I think, than, who's going to buy from Amazon? It's like every other retailer. They're essentially a retailer. I think they're going to suffer just like the rest of everybody else will, with energy prices continuing elevated, and inflation, I think, is going to stay elevated for a while, which takes people's disposable income, and now they don't spend as much, right? So, and Amazon's going to feel the crunch of that as well. So I love heavy bears too. I used to have a giant white bear, but all right. Thank you, Ellen. I appreciate that. Just what's semi? Look at CVI. Help me out. Say, hey, I'm not sure what just happened. How was I doing that? SPY. We'll look real quick. We only got a minute or two left, but didn't we look at the SPY already? Yeah, you know what? Where's the I'm a little cranky with Oracle too, because it's rocked yesterday, even though I got stopped out the day before. But how's the market crashing very soon? Yeah, I think it's already crashing. Actually, I am too. It's crazy. It sounds. I know some people are already starting to buy real estate. Excuse me. But as far as the SPX and the spiders, I think somebody else asked about that. Sorry, I can't read as fast as I'm trying to talk. But yeah, I would expect maybe we did this on the spiders, but I would look for a break out of that range. Until the market breaks out of this range, I'm not getting excited about anything. I might nibble. I might play a little bit. I wish I'd have stayed in Oracle yesterday. I might reload COP today, but we'll have to see. So, yeah, I think in the next, if you like real estate or if you want to be in real estate, I think in 1 to 2 years is going to be a pretty opportune time to buy. You got to remember that the interest rates and housing valuations are inverse, right? The higher interest rates go, the lower prices come down because people buy based on what they can afford on a monthly basis. People's buying power comes down dramatically, which is their buying power is going to drop 40 or 50%. It's already off 30 or 40%. And if you'd bought a year ago, a $500,000 loan would cost you, I think it was like $3,000 a month, which I'm in the Seattle area. So that's that's normal out here. You know, $500,000 house is like the low end. It's the bottom of the barrel. Excuse me. But, it was a $3,000 mortgage. Today it's like $4,000. So your mortgage has gone up by $1,000 at the same housing valuation. So the valuations have to come down. So the higher interest rates go, the more valuations come down. So when interest rates peak, when interest rates start to come down a little bit, I think shortly after that, within a few months after that, after interest rates peak and start to trail back down, is probably about the time to buy, because then valuations, because they don't catch up for a while, right? Right now, valuations are still high. Even though interest rates are high, people still have their pricing up high because even though they're starting to realize they have to lower their prices, and they are, to meet the interest rates. But as interest rates climb, housing valuations go down, and you got to look for that flip-flop. So anyway, little housing markets. That's just like nuts and bolts basics. So I don't know a ton about real estate, but all right, I think we have to wrap it up here. I don't think we can go. Did they cut us off at some point? I don't even know. So I got excited about that. It's like, anyway. It's all good. Oh, nice, Ellen. That's good. The $100 level. Yeah, and that might be, you're talking about Amazon. If you like it, I mean, I don't know where you're at. I don't know if you're a fundamentalist or not, but if we hold 100, which I would say it probably will, that round number is probably going to hold. I would sell some puts here myself if you really want to acquire stock. And then if it drops, if it stays above 100, then great. Keep the money for the puts. If it doesn't, drops below it, then you've got it for a little bit less than 100, right? If you want to own it at 100. But I wouldn't be surprised to see Amazon, and that obviously depends on the overall environment. Things can change. But typically bottoms are not quick. Like, I mean, there's not one here on example or on Amazon, but very quickly, then I'm going to shut up and shut this thing off. If we look historically at I think we have to go to a monthly. If you look at the bottoms here, this is a monthly chart, so it doesn't really show it. Actually, let me do this. I think I can do this quickly. That's the COVID crash. That's a V bottom. That's not normal. Okay. That's very abnormal. That was a very unique situation, very weird. And that's not what takes place typically. Trying to get back to 08. I'll just show the 08 after the 08 crash, because the 2000 crash is basically the same thing. There it is right there. All right. So here's the 08 crash, right? It started back here. 07, 08 started to drop off, and then boom, it accelerated. This is what a bottom looks like. Okay. There's a huge inverted head and shoulders. There's basically the neckline right there, right? You got a left shoulder, a head, a right shoulder. It took 10 months or so to form. I mean, the first shoulder was formed in about November, and it didn't break out of the neckline until next July. This is what the bottom will look like. It's not going to happen quickly. It's not going to be fast. It will take some time, and it will dig in, and the market will settle in. And I don't think it's going to happen quick this time, because I think the crash is probably going to be pretty ugly. I think it's going to be worse than the last two that we've had, and possibly even faster. I mean, you never know, but just based on history, the 2000 crash was about 24 months long, dropped about 46%. The 2008 crash was 18 months long, dropped about 54%. And you have even more people trading online and access to be able to hit the sell button quickly and easily now, and more people managing their own money than we had in both of those crashes. So if things really start to accelerate to the downside, then more and more people will just head for the exits. So that's why I think we may have a bigger, faster crash than the last two times. And if it's bigger and faster, then it will probably take more time to recover. So patience, breathe easy. It's not going to turn around anytime quickly. It doesn't look like, unless something changes geopolitically or anything else, something else crazy happens. But even then, it doesn't turn quickly. So patience, enjoy the bear ride while we're here, grow your own personal economy while we're in a bear market. And when the bull market hits, and the housing market hits, if you got some excess cash, go buy some houses. Right? It's all about building long-term wealth. So, all righty. I'm going to shut up and turn this thing off because I'm late now. But thanks for all coming out, having fun. Appreciate you letting me guest host. Hopefully I'll get to it again soon. So have fun doing this. It's always a blast. So y'all take care. God bless. Bye-bye.